Good morning, everybody, and welcome to the webinar today with Gary Norden. The Norden Method is something Gary has developed. Intro here, Gary's been a professional trader for over 30 years, and including several years in the trading pits of the LIFFE, and as a senior trader at some of the world's largest investment banks. He's a co-owner of the NN² Capital and the creator of the Norden Method, a unique style for trading order flow. Gary is an author of an End to the Bull and technical analysis exposed: why most technical analysis traders fail. Interesting read, or interesting subject. I have not read it, Gary, but anyway, I really like the title. I have his websites here if you guys want to reach out to Gary, the Norden Method, and then also GaryNorden.com, and I'll put this into the chat for you. Let's go through the disclosures and we'll turn it over to Gary, and he will go through his presentation here. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, so we're all set. Gary, why don't you share your screen, and then I'll broadcast it out to YouTube here.
Excellent. Thanks very much, Bruce. Just working on that now.
There it is. Got it.
All see that good? Well, thanks. Well, thanks for inviting me, Barswan. And I think really in conjunction with the upgrades that you're doing with your DOM, and we've been talking about this now for a few weeks, and it's great to see Bookmap and your developers working on these new tools for the DOM. So I think your clients are going to love them. So to coincide with that, really, we sort of thought, okay, let's do some webinars about the DOM. And I thought what I'll do is start right at the beginning, because I was there and I was sort of part of that development of it. And the DOM, to go back to right to the beginning of why this thing was built this way, why it looks this way, I think it will help over the coming webinars in the next few weeks and months, day trading using the DOM, why the DOM is such a powerful tool. So I think knowing this is going to help explain some of the things that I'll get to, because the DOM evolved, and it originally was built by pro traders, and then essentially new things were added. Some of those things, as we're going to see, are probably not going to help you. So the first of the major futures exchanges, the major exchanges with thousands of people on them that became screen-based was really the London exchange, and it was really when London LIFFE transitioned to electronic or a proliferation of new software developed. APT, automated pit trading, which was its after-hours trading platform. And it was trading for I think at least a decade before LIFFE went screen-based. So this was when it started about half an hour after the markets on the floor closed, so roughly 4:30, 5 o'clock, and it went for about 1.5 hours. Banks, brokers, locals, all traded on it, and there were no signs that locals had any problem with trading in an electronic format. So locals on the floor and all traders, all brokers, everybody who worked on the floor, most people, you had to get licensed to trade APT, like everything on the floor. You had to pass exams, make sure that you were able to use the software and make a market properly. But there are no signs that anybody really struggled, right, trading on there. Locals would sometimes trade on there in the evenings. But to understand why, you need to understand what APT was. And so before we get to the DOM, I thought I would show. Now I looked for images about APT. I could find nothing. I could find absolutely no images. Oh, hold on, let's go back. I could find no images anywhere on APT phones, so people weren't taking photos. So I've kind of recreated a little bit on the screen of what APT kind of. One of the interesting points was you signed in under your mnemonic. And then you would pick a pit. So this doesn't matter what this pit. Let's just say this is a footsie pit or whatever the contract we want to call it. It literally was like a rectangle on the screen, each of the markets, and the people would show up as these little boxes around and inside that screen. So I've just put my mnemonic, which on the floor was Uzi, UZI. So there's me at the bottom left hand corner. You would log on and you would just appear in the market. And if other locals or bank traders would appear, they're the other boxes around. And if I had a bid or an offer in the market, it would show what that was. So, here it might show me 34.30 bid for 2 lots. In the middle of the screen, in the middle of the pit, there would be the best bid, best offer, and the sizes of which, how many on the bid, how many on the offer. And you would see what the last trading price is, and you could see the last trades. And I think what's crucial here to understand is that you could see the traders. Right, so you knew who was buying or selling on APT, just like you knew who was buying or selling in the pit. So this APT system operated for, I'd say, about a decade, and it was an automated pit trading. It looked like a pit. You could see everybody who was trading. You knew who was buying after hours and selling after hours, and it looked like this. So given that, you could see the same information, and that's probably why it was not an issue to trade on it, right? Not a problem to work out who and what was going on. Most traders felt that when the floor eventually went computerized, that this would be the model, right, for computerized trading. That's what it was automated pit trading. It seemed to work. Okay, volumes after hours are not the same as volumes during during the day, but it still seemed to work. People thought that that's what this type of market would be when the floor eventually closed down. But a few months before the floor closed, and it literally was a few months, LIFFE announced this project, LIFFE Connect, where essentially LIFFE announced that they were going to open up their data to whoever wanted it, data vendors, platforms to link to the LIFFE data. And essentially dozens of new platforms decided and data vendors decided to join up, and this was literally just a few months before LIFFE closed, the pit trading closed. So this was all a huge change, right, for everybody. And there were I don't even know how many new platforms or how many platforms were created to trade and be ready for when LIFFE closed. So there's some names there. RTS, obviously TT's here now, PATS, Easy Screen, GL, Fastfill. Some of those you would have heard of. So, very few of them are still actually active. Some of them you may not have heard of. Okay, so there were many more than that. So this was a big shock as this transition happened. And it also meant that some data was not going to be provided under LIFFE Connect, right? So who was trading was probably obviously the biggest piece of information that was not going to be provided. So a huge change, and it meant that the new platforms would not look like APT. So traders that had used this automated pit trading platform for years and expected to just roll over into this were then faced with, it's not going to be that way. And then they had this choice of which platform are you going to use, and there were lots. The choice itself, though, wasn't just a wide choice. It was actually going to be limited depending on who your clearer, which products they offered. And remember, this is 1999, so there's no trading from home. So when the floor closed, depending on who your clearer was, you would basically, they set up rooms in the clearer, so you would have a direct connection to their server. These were usually within spitting distance or almost sometimes in the same building as the LIFFE servers, but certainly within a very near radius. So you would generally, most locals had a long-standing relationship with their clearers. Okay, it's one of the big things when you're a local, you have a good relationship with your clearer, you're usually with them for years. So most locals stayed with their clearers, and they simply used the platform that the clearer supported. And a couple of the ones that were the most popular, probably because they were also a couple of the cheapest ones, were Pats and Easy Screen. And some of the bigger brokers, bigger clearers in particular, certainly push their locals towards Pats. I know many locals that use Pats. Now, I was fortunate at that time. So this coincided with the birth of my first child. So I actually took several months off around that time. I missed the closing of the floor, the last sort of few weeks of it. I missed the first couple of months of screen trading because I was just, being a new dad, which turned out to be a bonus, right? Obviously, because when I got back, there'd been a bit of carnage here. Now, there are many other issues associated with the transition from floor to screen, and maybe it'll be a topic I discuss at another point. It's a very interesting time. There's a lot of misunderstanding of what happened then, and whether traders were successful or not successful, floor traders. But it's not as simple as saying that the floor techniques didn't work. And we're going to talk about one or two of the issues here that led to the creation of a DOM as well. But certainly some of those early platforms were very difficult to trade. I say I was fortunate. When I got back, some of these issues were being noted, and I actually moved clearer because it was obvious to my sort of trading group, people that I was close to and worked with, that TT was way better than everything else, and so we moved to a clearer that offered TT. And just to explain, like TT at that time, I was paying £1,000 sterling a month for it, and also paying £1,000 sterling a month for a seat and a desk in my clearer's office in their client little trading room they set up. Pat's was about £250 a month. So it's a massive difference in costs, right, between the two platforms. Perhaps understandable why a lot of traders went towards Pats, but often it was because that's what their clearer offered. So that decision, by the way, was a huge one for me in terms of profitability going forward. Making that decision to go and trade on TT, despite the fact my costs were significantly higher than others. If you're a professional trader, you don't worry so much about costs if it gets you better trades. And was it worth it? Absolutely. So not as simple as saying that floor techniques didn't work. Choice of platform actually was a big factor behind whether a local or any trader could successfully transition from the floor to the screen. It became, at first everybody just thought, oh, a platform's a platform, right? It wasn't that way. And I saw that firsthand. I had a couple of clearers, and I was in another one of my clearers trading rooms at one point, and I was using. At that point, I wasn't using TT. That's actually, I'll get to this in a minute why, but I was using a different product that I was consulting to and developing tools for. So I needed to move to a different clearer at that point to be able to test that platform and the tools that I was helping to create. And in that room, everybody else had Pats. And it was obvious firsthand that I was taking trades off of these other traders. I could hear them as they were missing trades and I was getting them. This other platform wasn't quite as good as TT, but in many ways it was good enough, and it was certainly better than the ones that the other traders were using. So for some techniques, even today, the choice of platform remains a crucial factor. So there are many platforms available, many DOMs that are just not capable of supporting, like the Norden method, the style that myself and my students use. There are many platforms that are not. I would say there's really only two right now that probably are. And Bookmap obviously is one of those two, and we're developing more and more tools for the Bookmap DOM as well. So platform, even to this day, the DOM, the platform you use, is still a big factor. If you are more of a swing trader, or you're only trading once or twice a day, then your choice of platform is not going to make too much of a difference probably. But if you're if you're trading a lot more, which certainly a lot more professional styles are, trading in and out in a few seconds or less than that even, and trading multiple dozens and dozens or even hundreds of times a day, platform is a massive issue for you. The choice of platform will still be a big factor today. So going back to this, so obviously there were different platforms back then, and the choice of platform was a factor. But the early, even the sort of DOM, and I'm putting DOM in inverted commas there because they weren't really a depth of market. They were just purely almost just a, well, you'll see in a second again, my little representation, but they didn't look like today's. So again, don't judge the failure of some traders back in 1999, 2000, which is when the stories of floor traders can't transition. Those sorts of stories started at this time. So by the time that Chicago started to transition, these stories were sort of became part of folklore, right? Oh yeah, you can't transition from the floor to the screen. Well, it's very different than the time that Chicago transitioned because the platforms had improved a lot because of the failures. It's a bit like the early days of the aircraft industry. And, I've got a story about that as well for myself. So the early platforms look nothing like what the DOM does today. So again, don't judge the traders then. And I don't judge floor traders who were using some of those other platforms. If they struggled, that didn't mean they were bad traders or they couldn't, it was just a fact of, if you look at what they were using, just wasn't going to happen. You just couldn't. And that's what will lead on to the rest of today and in the next few weeks. So some of them only had 5 price levels. They didn't even have each price level, but they rather would show you the best prices. So, and I can't remember like my first TT, if it had 5 or 10. I seem to remember it was 5. It's a long time ago, and there's been a lot of wine drunk since then. But the type of thing it looked like was something more like this, right? And again, I couldn't find any images for it, but you would have in like the middle of the screen, you'd have the bid and offer. Okay. What you'll notice about this is it shows me the best 5 prices, but they're not like now you have each price has its own little box, right? But you'll notice, for example, on the offers, right? You got the offer, the best offer is 29, and it's 31 above it. That's because that's the second best offer is at 31, 32, 35, 36, 40. So you can see that is not 29, 30, 31, 32. It would just show you the best prices. And in the early days, there were gaps, right? It wasn't as liquid as the market is now. This was important because it affected the way you traded and it affected what you saw. And it also, you think about this, there was a lot of, in those days, you would trade differently. And I've always said Norden Method has evolved over the years. And in this time, it was slightly different. Same philosophies, but there were some slightly different things. Here, what could happen was someone would come in and they would buy a bunch of, whatever this product is. And the 27 bid could go to, could say 38 bid, right? 2 seconds later, because they just bought everything. Now, if I decided that that's just like, shouldn't go up that much, okay, I would sometimes hit the bid there, right, which is not a normal style of trading for me, but at this time it was possible, okay. But the thing, of course, was that this square was not a square for 38 bid. It was whatever the best bid is. So if I click there to hit the 38 bid, and at that moment the 38 bid had already been hit or had moved, and the next best bid is 30, I'm hitting 30s. Okay, so it's different today, whereas now that square would be 38, okay, and 37, 36, and accordingly. So if I click that square to sell 38s, I'm only going to sell 38s. It wasn't the case back then. So again, look very different. You had to trade very differently. It had the potential to make good profits on this, but it also had the potential to screw you over sometimes. And one of the early styles of trading that was very, very profitable, this was really a profitable way of trading, was what's called diming. Now, diming in the pit days was something you just didn't do, right? It was like, it's more than etiquette. If you were someone that dimed, you would be hated in your pit. Now, what is diming? Diming means jumping inside a price, right? Usually by the minimum amount. So in a pit, for example, I was an options market maker in a pit. If the pit basically, we come out with the price 14.18, for example, 14 bid, 18 offered. Diming would be someone saying, I'm 15 bid, right? The way it worked in the pit is if the pit said I'm 14 bid, I'm 14 bid. Diming, if someone went 15 bid, it was just not something that was done. But if we go back to here, diming became something that was very, very possible. So what would mean is, let's say the best bid's 27 and the bid below it is 20. Okay. Now, rather than trying to put into my keyboard, I want to pay 21, so you've got to do it manually. We used to use a three button mouse. So left click was input the order, right click was pull the order, middle click is dime. So what I would do is if this was a 20 bid, for example, I would middle click it and it would immediately place me the minimum above that. So let's say it's one tick, it would immediately put me 21 bid. And what I'm trying to do is trying to capture if someone tries to sell 27s and there's a few left over, I feel like if I can buy 21s, I feel like I can make money, right? So diming became an absolute way of trading back then. And it was a very profitable way. Obviously, diming is not it's not relevant now, right? Because the platforms are different and the market's different. What I'm just trying to explain is how different trading was, how the platforms were different, and so we traded a bit differently, and a bit differently to how we would have traded on the floor. As liquidity improved, this changed as well. But it was clear that there was improvement was needed for these DOMs. Okay, so some traders were struggling, not all. And again, there's another story behind the failure rate than just, floor traders couldn't transition. You have to have a look at who these people were that were trading on the screens, and they weren't all locals. Again, I'll maybe tell that story another time. But it's clear that improvement was needed. All right, because there's a lot of information we couldn't see, and we had to obviously change our styles, but these things weren't going to hold up for what we wanted. So most platforms sort out, this was a few months in, and then continuously profitable ex floor locals to consult on improving these platforms. Again, I wouldn't really call what we just saw as a DOM. It was just some kind of a matrix almost showing us the prices. So they sort out ex locals. So as I said, I consulted two or three. There was actually many of us were in the same sort of building. There was a building just around the corner from the live floor where it housed a number of our clearers. It housed a number of small locals. It housed some of these software firms and trading platforms, all in the same building. So we would often go just up and down the lifts, and I would often be visited by a platform guy who says, what's going on, what do you want? And this took place over several months. So I said that I was consulting to one firm and helping to develop some tools for them. And I think it's fair to say a number of locals were doing a similar work. And I feel very much like we were kind of like test pilots. We were coming up with ideas and then testing them. And just like test pilots, it doesn't always go well. And I'll just give you a story. So I said to you that I'd moved to a different clearer to test a platform. Now, this platform, I had worked with them. One of the issues I was having, again, these products are very vanilla, was I was trading FTSE and was trading 2 lots and 4 lots generally, trying to trade 2 lots and sometimes up to 4 lots depending on the conditions. And one of the issues becomes around partial fills. What happens if you get 1 lot? And the DOMs are very vanilla in terms of you could trade, you set them up for 2. So I would have a 1 lot, a 2 lot, a 3 lot and a 4 lot. So if you're trading 4, you sometimes get filled in 3. I had to be able to get out of all. It was a little bit messy. So what I asked for, what we ended up developing was, if you picture a DOM with your columns where you click on to put your bid and your offer in, okay, you would have a number of those just outside of each other. The first one would be I could default to a 1 lot column. The second one I could default to a 2 lot, 3 lot, 4 lot. So I could have one DOM and just click, if I could click my 2 lot column, I'm trading 2 lots. If I get filled in 1 lot, I can just quickly click on the 1 lot column to exit the trade. I thought it was a pretty cool idea. Certainly compared to what was available, it was pretty cool to be able to get in and out of different sizes in one DOM. So we worked on that, or they worked on that, developed that. I then had to go and test it. So I went to this other clearer because my clearer wouldn't support that platform. And cut a long story short, the feature worked fine. Okay, it worked fine. There was another problem. As they were developing the feature, they forgot something and there was a bug. The bug essentially meant, and I don't know why it happened, but it only started in the afternoon. The thing worked fine for me all morning, and then sort of in the afternoon, I noticed I thought I should be getting filled on trades, and I wasn't. And then so I just cancelled them, and it's happened a number of times. I should be filled there, wasn't filled, cancelled it, and I went home, and then my clearer rang me and say, Gary, you're normally flat at the end of the day. I'm like, oh, yeah, I am flat. I made sure I was flat at the end of the day. And they're like, no. And I think I was short like 30 FTSE. For some reason, they were all short trades that got, what happened was there was a bug in their system that wasn't recognizing the fill from the exchange. So the exchange was filling them. It didn't recognize it in the platform. Only happened in the afternoon. And as always happens in trading, Sod's law is that when you're short 30 FTSE in the after hours trading, it's just ramped, right? It just, I don't know how many ticks it gone up, but I think FTSE was up like 40 or 50 after hours. Can't remember exactly the sizes and the numbers. I do remember it cost me in excess of 10 grand, which was a fair amount, right? And one of the things is like, obviously the next day I go to the platform provider that I'm consulting to, say, look, there's a bug, something happened. And they go back and say, oh yeah, thanks for that. No, yeah, there was a bug. We found that out. Thanks very much. So very much like a test pilot where there's a problem with the plane. I wore that loss, right? And as part of the relationship is that we all help to develop things, help to improve the DOMs, help to come up with new ideas, and sometimes they hurt us, right? Because of this was not my fault, but there was a bug in the way they developed it. But gradually, more and more improvement, and then you end up with the DOMs more like the DOMs that we have today. So key things to remember are that the DOMs, certainly when the first sort of changes and the first lot of new DOMs were created by ex-floor traders, order flow traders, essentially, right? They created them, the tools that they wanted. So what sort of tools did these people want? What sort of tools did us ex-floor traders, order flow traders, what do we want? Well, we obviously wanted every price level displayed, not just the ones where there are bids and offers. Okay, so that was one thing that changed, so that now you have the whole ladder and every price has its own little box, and so accordingly, if there's nothing there, it will just be empty. We wanted the ability to change trading sides quickly. We would do that whether it's because we get partial fills or whether it's because market conditions change and we will just change our size accordingly. We wanted it easier to see the last traded price. These are things we always want to know. Where's it trading? All of these improvements are driven by X4 locals. Where is it trading? How can I get in and out quickly? These are the kind of things that we're looking for. These are the kind of changes that were made. And actually reasonably quickly, the best DOMs became really good, and then the others basically just fell away. Just no one wanted them, right? It was reasonably quickly that happened. So we want to see the local driven improvements are that we want to see the information as objectively as possible. This is what we were wanting. I want to see this information, just what's trading. I just want to see what's trading. I want to get in and out quickly, as I said. Where are we trading now? That's the question that order flow traders always need to ask themselves. Order flow traders should not, and we'll get to this in another webinar, I'll talk about order flow trading, pure order flow trading. Really not interested in the past. Where are we trading now? Can I judge liquidity? Again, I'm going to talk about that topic a little bit more as well in a future webinar, I'm sure. But liquidity as well became an issue. So it's a huge issue for order flow traders. It's a big part of what we do. There's, part of it, I could say, order flow trading is almost judgment of liquidity. It's not necessarily judgment of price. So these are the things that locals wanted, and these were the early and the most of the first adjustments on the best platforms were to fix these problems. What we didn't ask for and what you didn't see until a little while later was obviously standard price charts, right? Normal price charts that are made and the ability to trade off them. We had no interest in that. We had no interest in indicators. We didn't want that. Order flow traders shouldn't use indicators. We didn't want anything that sorts the information subjectively or on a time basis. Again, I think that's another topic. I think I've lined that up for perhaps the next webinar to talk about that point, just that point about time basis. But we didn't want to look at it on a time basis. It's one of the main benefits of using a DOM is you do not look at the market on a time basis. It's just, that's what happens now, and it just continually shows you what's happening now. That's a massive advantage if you learn how to use that. So these types of tools were added later at the request of more retail-oriented traders. But some of them became standard tools, right? They just became normal tools. And people then, what happens is that you've got now this sort of combination of tools that were created by real order flow floor traders and real order flow experts. And you had tools that were created by sort of more retail-oriented people. And then they all kind of get mushed together. And then that's kind of where I think the last, from sort of 10 years to, even reasonably recently, for many platforms, that's where they've gone. Right, and a lot of people don't know the difference. They don't know the difference between which tools were more retail and which ones are not. And there's some tools which are believed to be sort of standard DOM tools, which, in my opinion, really shouldn't be on there. And they're more like a different form of TA. So to sort of summarize, here, and this is really to set the platform, right, for future ongoing webinars where I'll talk about some of these points in more detail. But I just thought I would start with the history of this so you can understand, because the DOMs were created by and for professional traders. That style, that's what they wanted to see. They wanted to see it in that DOM format. We could have chosen any format, right? We could have asked them to do it in various different ways, but we didn't. We wanted it in this format for a reason. It's important to understand that the DOMs that we see today are the evolution of the work of both professional and retail traders. So that means, some elements of some DOMs are good and some are not. Some will help you and some won't. And knowing which features are important. If you're by the way, if you're trying to trade in an order flow in and out quickly scalping style, right? If you want to trade in that way, then the DOM is number one, it's the best tool for you. But number two, you got to know which tools are helpful and which tools are not. They're still the tool of choice for professional order flow traders, DOMs. Okay, that to me, it's night and day. I'm still a massive fan of DOMs, and as I was there at the start. I know why they were created, and I understand exactly what the strengths of them are. And I think they have well, they don't. I don't think. I know they have significant advantages, particularly over price charts. If you're trying to day trade and actively day trade in particular, and you're using just a normal chart, you're at a massive disadvantage to a DOM trader for a number of reasons, and I will explain that later. So I also want to just throw out there that if you have questions about DOMs or order flow style trading and you want to send them in, and there could be a topic for one of these webinars, I'm more than happy to take on board some comments and requests for topics as well. But today I just wanted to set up, using the history of what these things are. And I know that Bookmap are doing a lot of work, and it's been great to work with them in the last few months, helping to develop these the new tools for their DOM. And I think it's gonna, it is a great offering. So by all means, if you're not using DOM, have a look at them and start to understand that. So yeah, that's the end of me. I think Bruce, you're going to show some things. Yep.
Yeah. Thanks, Gary. And I actually, if you can go back to your last slide for just a second, I had a few
Cool.
questions
Hold
actually
on.
for you.
Hold on.
And then
To share
we'll
again.
get Maxime on the developer here, and he'll go through some of the features. He'll just be able to go through it much quicker than me. So
Okay, yeah, questions on the last slide.
yeah. So the significant advantages, and I'm really everybody like we're very lucky to have Gary agree to come in here like a couple times a month and give this presentation on domes and go through more and more information on order flow trading. He's an expert, complete expert, as you can gather. When you hear people talk about uh, that it's about the here and the now, and no, and a price chart is just a distraction. I mean, we're talking about pure order flow. Or I really liked your comment about this is about liquidity, and judging the liquidity more than anything else. And something about Bookmap, to just let everybody know, our history is very different, very different than this history on the depth of market developments. Our history from Bookmap came from the algorithmic side, and our software was developed for ourselves to understand how our algos were performing. That's why Bookmap can go down to these really low sub-second levels, nanosecond, resolution, basically, to understand like where did we exactly get filled, and then from that it was a good representation of how the market works, and showing supply and demand, and etc. I was wondering though, Gary, like about the advantages that you said you'll explain in another webinar, but like what is it like that a lot of the dome traders find as an advantage? Because, well, I guess maybe part two of the question is, I see a lot of dome traders on there. They might be swing trading or day trading longer term. They're not getting in like every second, or several times, or hundreds of contracts per day. So what kind of advantages do those does the dome offer these higher frequency traders, and then like also like a longer term trader?
Yeah, it's a good question. I would like to. I'm going to hopefully break that down into specific areas over the next few webinars. But from what I can see, like if you're a swing trader, I really don't know what the DOM offers you. I'm always interested to know why swing traders would use a DOM, because I kind of feel like they're trying to use a professional tool and make it look like they're doing something professionally, but it doesn't. It's not really necessary. It certainly wasn't the reason why DOMs were created. So I can't really answer why they would use it, because I don't know. Like obviously they've got some sort of setup somewhere that they're looking at, but in terms of entry and exiting, if you're good, holding a trade for half an hour, 3 hours, or something like that, the ability to input an one-click trade and all that kind of stuff is not really needed. I suppose you probably you're not so conscious of the price that you're paying for. Obviously for me, I'm trading for a couple of ticks. It's really important, but for them, if you think you're going to make 30, 40, 50 ticks, then those sorts of things are not important. So why is the DOM, as I said, has lots of advantages. I'm going to talk about them specifically. So, one of them is about what are the deficiencies of looking at the market on a time basis. But DOM, obviously, to sort of hit on one point just straight off, is you have to be in the now with a DOM. And I think if you're a day trader, I think it's a strength is to trade the now. The DOM, if you had just the DOM, nothing else, and this is how I teach my students, I don't want any charts up alongside it. You don't know what it looked like half an hour ago. All you see in a DOM is what's happening right now. That's a massive advantage, I reckon, for a day trader. I'm not interested in what happened half an hour ago. I just need to know what's happening right now. Bearing in mind as well, I'm in and out in a few seconds. All it's important, I said that pure order flow trading is as much a judgment of liquidity, and I actually just written an article on my Substack about this, and I'm saying I'm going to discuss it more in a further webinar here as well, hopefully at some point. But it's really just pure order flow trading has to have an element, a large element of liquidity analysis. DOM tells me that. Chart doesn't. DOM shows me the liquidity right now, and I need to know that. I need to know about what the liquidity is. It helps me make a judgment of whether I can trade and how I can trade right now, and the chances of me getting in and out of this trade in the way that I want, in the time that I want. And as I say, more than anything is, if I'm trading order flow trading, and as I say, and order flow trading, which is another topic I'm going to discuss, because that's become an absolute shitfest of a topic, right? Like there's so many things that people call order flow trading which are not order flow trading. Again, I discuss it in my Substack. I'm going to talk more about it in another webinar that we'll have here, hopefully, because I think it's a huge topic. So what many people think is order flow trading, and they go, well, I need this DOM for this order flow trading. Guess what? What you've been taught ain't order flow trading. That's just another form of using levels or technical analysis. So pure order flow trading has to have a reasonable element of liquidity in it, and the DOM is the product that shows us the liquidity. That's why it's so important. And I know you guys, even with your heat map, liquidity is a key feature on it, right? To see what the liquidity is on different levels at the moment as well. If you're any kind of professional style trader, you are, if anything, as judgment of liquidity. It's huge. So being in the now, being able to judge liquidity, these are two huge advantages of a DOM.
All right,
Does that make
excellent.
sense?
Absolutely, absolutely. And yeah, I'll refrain from any more questions on that because it's a spoiler for your next few webinars or in the future. So yeah, that was the only question I had. Well, except that the ATP
APT, yeah.
APT. I'm wondering about like so it looked like that originally it was kind of a mock, or the markup was, or the mock-up of it was like an auction, and people made the transition. I really liked hearing about this history, that they made the transition very easy. It's like, oh yeah, it's just like a pit, but it's on the screen.
Exactly.
and
Yep.
uh, and then that really got turned upside down into showing depth of market, and like you said, like being able to make that transition, and interesting history on the software development, and also the politics involved in it with your connection as well. And then because of that kind of revolution there, you lost a lot of people. They could not make the transition due to the different visualizations of the market, is what it sounds like. Or
Yeah, it's a
or or
tough
they
one
just, or they didn't
because
have the advantage either.
yeah, there are a lot of things happening in that transition. But one thing I'll say, so a lot of firstly, the vast majority of people that worked on the floors were not locals. Vast majority were not locals. I think you'd say the biggest cohort on an exchange would be clerks. Okay, and then the next biggest cohort are going to be brokers and pit fillers. Now, on the floor, everybody wore a color jacket in the pit, called themselves a trader, right? Pit trader. But there's a difference between locals and people that were filling orders for a broker, right? Very different business. One's trading risk for his own money, one's just filling orders. The majority of people in the pit were people filling orders. Now, and then, what percentage of traders in a pit were locals? Hard to say, but, I think you're probably looking at 10 to 20%. Maybe some pits would be more than that, right? Maybe some pits would be maybe 30%, depending on the pit, right? But most people in the pit were not locals. And what's important to understand is that when the floor closed, those pit fillers, execution traders for all the brokers, the Cargills and the Revcos and the GNIs and the Tullets and all those sorts of firms, right? They all had pit traders. They all lost their jobs. They all got redundancy payments. So what's the key thing they're going to do? What are they going to do with their redundancy payments? Some went and got jobs. Some decided, what have I done for the last 10 years of my life? I've been in a futures pit filling orders. I know futures markets. So they went and started to trade futures in some of these, prop rooms and their clearers, they put their, their redundancy money, and they put up their, money and started trading. What's really important to understand is they were not locals on the floor. They were not traders as such, risk takers on the floor. They became this. And so when you hear about, all the floor traders failed, a lot of the people that failed in that first 6 months were not locals. They were people who were pit fillers, execution brokers, and many of them very, very good execution traders, right? They could fill an order in a busy market really well. But that's different to working out, where should I bid, where should I offer, where is it, are we going up, down, all those sorts of things, all the decisions that a trader makes. If they were that way inclined, they would have become locals when it was on the floor, but they weren't. So this again gets confused, right? People don't know about the difference between pit fillers and that, so they just say, a lot of floor traders lost money. Yeah, a lot of them did, but that's because they turned to trading for themselves because their own job didn't exist anymore, but they weren't locals on the floor. So in terms of locals, some just decided not to become screen traders. There were a number of locals that basically had already made their money. They only went every day to work because they just loved it, right? They just loved the floor and the camaraderie and the fun and the jokes and the singing songs and all the drinking and all the things that were good fun. So when the floor finished, that's gone. They're not going to trade anymore. As I said, maybe 10%, maybe less of the people on the floor were locals. So that takes a percentage out. Some did continue. There were some locals that did very well in screen trading. Again, this gets lost, but some forms of trading became easier, and I'm talking about spread trading. Spread trading became much easier. I think TT was the first platform that had the spread matrix, right? But it became much easier to spread trade than it was on the floor. On the floor, if you're trading, red June green deck or something like that, you've got to keep asking what's green deck, what is it, who's there, where's the guy who's bid for red June, and you just have to keep trying to figure it all out. Whereas when it went screen based, it's there in the matrix. It tells you what the bids are, what the offers are. And I know a number of spread traders who were very happy when the market went screen based and did very well, until faster traders came along at least. So that transition, be very careful about like who failed and why they failed. And then of course, like you said, Bruce, and I was saying here, you can't judge them by the platforms. It's like saying, why didn't early pilots, fly across the Atlantic? You got to look at what they had, right? You can only do what you can do with what you've got. And as I say, I had to come up with a whole new bunch of ways of trading. Now, I wasn't a futures trader on the floor. I transitioned into it. So I was starting from scratch, came up with some ideas. I talked about diming and things like that. And then again, always had to evolve, always using market making principles, but always evolving and changing into as the platform changed. But yeah, it's it's very hard to judge, and there's a lot of stuff about their techniques didn't work. That's not what happened. And once we'd changed the DOMs, once we had worked on them and improved them, it became a lot easier to trade. But of course, some didn't make it to that point. That's a bit of a shame.
Yeah, yeah. No, it's really good to hear the details on this, and understand like how this kind of unfolded, because yeah, there's even a movie on it, like Floored, I think is what it's called, uh, and how they couldn't make the transition. But this is a very different story than what I heard from that movie. Uh, and it's great. It's great to hear this, because like yeah, this is the real history of it here. So hold on a minute here. I think I've got Maxime on. Yeah, we do. And he's going to show his screen here, Gary. And so like basically just to transition into this here, let me get Maxime's screen up here. What we have, what we've done is, yeah, hold on.
Sorry, Bruce. I'm not sure how to share the whole screen.
Yeah, no, you've got
you
it.
see only my bookmap, right? So I don't see any DOMs.
Correct. It just Bookmap. So
Okay, I see screens. Yeah, cool. Sorry, I have just few minutes, so let me quickly walk through it. So now you see my whole book map with some DOMs, settings, etc. Right?
Yes. Yeah. Yeah.
Cool. So let me briefly walk you through what we have in a new version of DOM, which we can release tomorrow. So there are several features which we think are quite cool. Like first feature, so you see my DOM on the left side, and you see this black line. So this black line is our previous center. So now we have outer center, but now we can see where we were previously before each center. So I can move with my button click, and you see that the center was moved, and the black line indicates where we were previously. So you can switch on and off this line with this button. Run settings. Sorry, I need to be here. And you can switch it off and on any moment. Then second cool feature is single click move. So if I enable it, I enable my trading here, and I create an order. Then if I wanna create another order and cancel this one, I don't need to do several actions. Now it's done with just one click. So what happens behind it, you just perform a move action. So you can move your order with just one click. And it works on any side of your DOM. So it works same way on bid and ask side, and I think it works also on your stop losses. So it's quite cool. Then what we also have now, we have customization of your last trade price. You see it was black by default in the past, and there was no way to change it. Now you can choose any color you want, and it will be set up here. That's one more feature. Another cool part, so important thing that this new DOM works with only Bookmap version 7.4, and that version supports new shortcut API. So in this new shortcut, you can have shortcuts related to some specific add-on. In our case, it's DOM Pro. So in new version of DOM, we added 2 shortcuts. In future versions, we're gonna make some more releases related to DOM, and there will be a lot of other shortcuts. But for now, we have recenter. Unfortunately, you cannot see what I click on my keyboard, but let's say we have this active instrument recenter, and I'm here. I need to close this window, and I'm in my DOM. So to be able to recenter, previously I had to click on this button. Now I just need to make a click on my keyboard. I click Y button, which is what's configured like for this active shortcut, active window shortcut, and also there is possible global shortcut, global recenter. So if I have multiple DOMs, let's see, yeah, it changes position, center position in all windows with one click. Yeah, so there are some minor improvements, like now when I click a button, you see that my cell is highlighted and I see exactly where I click. And if I have, let's say, okay, I have single click move. So if I have multiple orders and I choose one to move, so you see exactly where you click. Before, it wasn't highlighted and it was that clear. And one more thing, which is not available in paper trading. I'm in paper trading mode. I need to restart my bookmap, but I don't have time for it. But like, just believe me in my word. So let's say I place a limit order, and here in this column, you see this position Q column. You'll see your real order position. So it will be like 100 something position. And okay, probably somebody is testing in parallel. We have shared account. So you'll see your position of your order in this column. So it's a quite cool feature. Sorry, Bruce, I need to go. So I think I covered all features. So thanks for attention.
Okay. Yeah. Thank you, Maxime. Let me get back here to the presentation. Yeah, positioning queue is central. Redshift tracking. Yeah, so basically, what we're doing here is exactly what Gary had been talking about. is we are going through again the evolution here of listening to Gary and other DOM traders, and what do they want? What are they looking for? And then delivering on that. The changes that Maxime just went through is precisely this. It's very, very different than it's a very kind of different clientele that we're talking with, and they're looking for again these very, very quick ways of trading, and being able to execute very, very effectively and efficiently, and that's what's important here. In the DOM or in click trading, we have these new features that Maxime just went through that will offer this. Okay, this is precisely coming from Gary and others. Hope you guys enjoy it. It's kind of a little prelude or a peek into the release tomorrow. So you guys can play around with it tomorrow. It will be released tomorrow. All right, so just wanted to give you that sneak peek here today during Gary's presentation. All right, so yeah, I don't know, Gary, can you hear me? You're still in here? I had a problem there.
Yeah, I'm still here.
Okay. All right, so anyway, yeah, we're kind of just over our time here. Gary, did you have any questions on that, or is there anything that you wanted to wrap up with here? I'll give you the last word.
I just wanted to say I'm really, really thrilled that you made these changes. It's been really cool to to chat to you and your developers, and these are all exactly what we talked about. Where's the market? Where am I? Where can I see it? Where is it trading? These are all huge things, even though they're small. So well done to you guys, and I think all these improvements are excellent. So thanks for that, and thanks for having me on.
Excellent. Well, thank you very much, Gary. Looking forward. We'll have you again in a couple weeks, and do it again here.
Look forward to it. Thanks very much.
All right. Goodbye, everybody.